How about Tesla specifically, which is now off 37% from the recent highs, is down another more than 5. Everyone wants to know what your new price target is, Cathie. Where are you now on where that stock goes?
So you might imagine the price targets have gone up considerably.
Now, if you haven't followed my channel for the past week, then you already know that I have been buying Tesla on every single dip, and my only regret is not buying more, as Tesla has been down significantly for the past weeks. And even after the significant drop, I still believe that Tesla will be a $1 trillion company within the next 2 to 3 years. And yes, I am being extremely conservative, as there are even some analysts out there that believe Tesla could hit a $1 trillion market cap by the end of 2021. So in this video, we are going to take a look at 3 different catalysts that are right around the corner that could help make Tesla reach a $1 trillion market cap by the end of 2021. And by the end of this video, I will also be sharing the one partnership that you guys need to know in order to make sense of Tesla's future, as they are on the path to becoming the world's most valuable company. So strap in and let's get ready for the ride. But before we get started, to support the channel, do hit the video gently with a thumbs up, subscribe if you're new, and comment down below if you have been buying on this dip. Let me know down below. So with that being said, let's not waste any more time, let's get started. Now, I know that saying Tesla could reach a $1 trillion market cap by the end of 2021 or even within the next 2 years sounds a little absurd, but we have to always remember, as Queen Cathie has said before, to keep our eyes on the prize.
Well, we keep our eye on the prize. We have a 5-year time horizon. But the 2 things that have happened to Tesla since our last projections are, 1, it has increased its market share. When we put out our original $4,000 price target, so the equivalent of $800 now, we thought that Tesla's share would drop from 17%, this is share of the electric vehicle market, global electric vehicle market, from 17% then to 11%. Instead, its share increased as others with wonderful brand names started increasing the number of electric vehicles in their companies. So that was a big wake up. In the United States, I think Tesla, through the 3rd quarter at least, was still 80% of all electric vehicles sold in the United States. So pretty stunning. The second thing that has happened is autonomous. What's interesting about autonomous is the margins in autonomous, the gross margins, are in the 80% range. The margins for electric vehicles alone are in the 25 to 30% range. This is a 5-year projection.
And she has also noted that the whole ARK Invest team has remained incredibly optimistic about Tesla. Now, Cathie also noted that ARK Invest is about to release its updated forecast on Tesla stock in the next couple of weeks. And based on ARK's observations about Tesla, Cathie noted that the new price target would be a lot higher than before. Now, before we go over the rest of the catalyst, the main reason that we like to pick individual stocks and end up losing money is not because we can't find great businesses. It's that most of the time we find great businesses to buy, but then the problem comes when we are influenced by our emotions and end up buying or selling at the wrong time.
Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock?
Yeah, selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along the next day and says, "I'll pay you 15," you don't sell it because the quote's 15. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated on what you're really buying, which is part of a business. And the longer you hold stocks, the less risky they become. Whereas the longer the maturity of a bond, the more risky it becomes.
And this has been the case with Tesla for the past few weeks, as I know that a lot of you have been letting your emotions get in the way, but we have to remember that fundamentally Tesla has not changed. And if you're still asking yourself, what should we do if we can't keep our emotions in check? Now, in the short term, the stock market prices will go up and down for no reason. However, on the long term, fundamentals will catch up and the stock market will reflect accordingly. And the one thing that makes me very bullish on Tesla is that their demand keeps growing. As recently released figures from the China Passenger Car Association have revealed that Tesla produced 23,632 vehicles and sold 18,318 vehicles for the month of February. Now, this represents an 18% growth over January's numbers, when Tesla only sold 15,484 vehicles. Now, Tesla's new numbers indicate that Tesla has managed to sell over 18,000 vehicles of the Model 3 and the Model Y to the domestic market. And this is very impressive, especially considering that February is only 28 days long, and it also only accounted for 7 days of the Lunar Festival Chinese Year. Now, companies like Tesla are required to take mandatory breaks for the nationwide celebrations during this period, which meant that Giga Shanghai was only in operation for just 20 days. Now, growth stocks are generally more volatile than the overall market, so then as shareholders of Tesla, we should remain focused on the company's underlying business. And on that note, management has already guided for its year-over-year vehicle delivery growth to accelerate this year compared to last year, as they are expected to achieve a 50% on average annual growth in vehicle deliveries. Now, I know that many of you still believe that Tesla will hit $100 or $50 per share, and many can agree that the sell-off has actually created a massive buying opportunity, since fundamentals are strong and tax incentives should help increase demand in the EV space. The next 5 to 10 years are going to be all about decarbonization, as Tesla has been launching new products. Semi-deliveries are expected to start in 2021. Mass production of the Cybertruck is expected in 2022. They are also building gigafactories in Berlin and Texas, launching the new Model S and X versions, and planning to mass produce the 4,680 batteries soon. And all of these new products and expanded production capabilities should keep the revenues on an upward trajectory. Meanwhile, Tesla also plans to start licensing its software to other automakers and wants to monetize its supercharger network of EV chargers. Additionally, it plans to launch full self-driving subscriptions for drivers very soon, and they will also be putting additional attention and resources into expanding its solar business in 2021 and 2022. But stick with me here for just a few more minutes. So while Tesla is one of Elon Musk's many world-changing companies, we should still keep in mind that we could factor in the potential of Tesla's SpaceX jumping into the equation, and this is something that I spoke about in one of my videos last week, and I think we're about to see that finally happen. And I'm not talking about Elon wanting to offer gas-powered thrusters from his SpaceX rockets on the new Tesla Roadster, but I'm talking about something much bigger than that, and how SpaceX intends to create a global communication system with Starlink, as the data transfer speeds would be a lot faster than traditional internet connections, and Starlink would deliver high-speed broadband internet to locations around the world where access has been unreliable, too expensive, or non-existent. So now the time has come, and SpaceX wants to begin connecting moving vehicles from cars and trucks to jets and ships to its Starlink satellite internet network. According to a request the company filed with the Federal Communications Commissions, the application would serve the public interest by authorizing a new class of ground-based components for SpaceX satellite system that will expand the range of broadband capabilities available to moving vehicles throughout the United States and moving vessels in aircraft worldwide. Now, to date, SpaceX has launched more than 1,100 satellites for Starlink, and in October, SpaceX began rolling out its service in a public beta to customers in the US, Canada, and the UK. Now, not only that, but we also have the Green Act, the federal tax credit of $7,000 for the next 400,000 Tesla vehicles, which is very likely to happen, for their expansion into the Chinese markets and Indian markets the Model S and the Model X refresh, the Cybertruck update, which is going to be revealed in mid-April, and the Tesla full self-driving by October 2021, which is currently in the beta program. So wrapping up, there is definitely a lot of great catalysts that we have for Tesla, and fundamentals have not changed. So this is why it's important to just keep a long-term focus and think long-term. And that's why I only like to invest money that I can afford to keep invested for the next 10 years. As always, I will always recommend you guys to do your own due diligence and do your own research, as that's going to help you build conviction on Tesla, and that will prevent you from panicking or selling when we see red days in the market. So with that in mind, thank you guys so much for watching. If you enjoyed this video, do not forget to give it a thumbs up, subscribe, and hit the notification bell for more. And if you want 2 free stocks, WeBull is going to be giving you 2 free stocks if you deposit $100 or more into your account, and one of those stocks could be valued up to $1,800. So be sure to sign up using my link down below. Again, thank you guys so much for watching. Until next time.